welcome to another episode of Copper Bottomed. It's the 28th of August, and we've got plenty to get through, so I'll get going straight away. Here you can see the 25-year copper price. Not much movement in the last 6 months. Obviously, there was the storm in the teacup over the Trump tariffs and the 50% tariffs on copper into the US. That has dissipated. Remember that we didn't actually see it in the LME price. If you look here, this is just from the beginning of 2024. You can see the LME price really hasn't budged since April. And it was the COMEX price that was rising. There was an arbitrage. And so you saw the stock decline in the LME as the Trump tariff kicked in from April. And that arbitrage has gone away now. So no real fundamental change in the copper price. And as I said, storm in a teacup over the Trump tariffs and the COMEX price. There is still, however, quite a large differential. If you look at the relative performance of gold to copper over the last 25 years or so, gold continues to outperform and copper continues to lag. And as I said last time, and I'll repeat again this time, I don't see that the fundamentals of the financial markets are strong enough for gold to pull back in any meaningful manner. Okay, we're up at around 3,380, $3,400 per ounce, and so there may be a retracement of $100 or so, or $200, but I'm not looking for I don't expect a meaningful re-rate of the gold price lower. However, I do expect this to close, and I think what's going to happen is over time the copper price is going to meet and going to close that gap. And this chart I always like. It's the copper price in real money terms, so copper divided by gold for the last 25 years, and you can see that the copper price has it's on a downward trend. Copper has got cheaper in real money terms. Now, obviously, the general thesis is that cannot continue. Mineral deposits are deeper and lower grade. The large companies are spending more money just to stand still. And of course, the demand trend is shifting up with AI, electrification, and general gentrification of the population. We've got 8 billion people on the planet, 6 billion of whom are aspiring to the lifestyles of the upper 2 billion people. Right, so the macro themes are there. Okay, digging down a bit, let's go to the States. Quite apart from the cancellation of the Trump tariffs, a couple of days ago, the US declared or proposed adding copper to the critical minerals list. I'm not sure what this means. In reality, I think it's just kind of acknowledging that it's a core part of the primary materials that allow our world to function. As I spoke about in the previous session, the US is short of refining capacity, so it needs refinery smelters rather than new mines, although new mines will help. And of course, once you've put in a whole complex legislative structure, it's really hard, even if you put out kind of a headline saying we want copper to be a critical mineral, it's really hard to go through all of the laws and all of the cultural changes to actually enable that to flow through. It needs a root and branch shift in culture. And I spoke last time about the problems about exploration and the 5-acre ruling in the US, but this is a cultural one. So these are two separate headlines. That was a Reuters article. This is an Associated Press article talking about resolution, and it shows that the transfer of federal forest land in Arizona to a pair of international companies, that's BHP and Rio Tinto, plan to mine one of the largest copper deposits in North America. And it was kicked back by appeals and social and environmental. Basically, humans very naturally don't want change in their living environments. People don't like change. People typically don't want development in the Western world. And we're seeing this writ large. Now, Donald Trump says these are radical left activists, but it's a fundamental conflict between people not wanting change and humanity needing development. So that's not going to go away. Also in the US, Hud Bay, they've got this project called Copper World. This was a really interesting story from a few weeks ago. They've sold 30% for 600 million, which puts the value of this asset at $1.8 billion on a market basis. If you look at the NPV from so that on a 100% basis and using copper price of 375, the PFS after tax NPV of phase one at an 8% discount rate gave $1.1 billion and an IRR of 19%. So you've got the phase one NPV showing 1.1 billion. You've got the market price showing 1.8 billion. Phase one, of course, has been changed now. So they're looking at phase two, which is expected to involve an expansion onto federal lands with a significantly longer mine life, all good, and enhanced project economics, all good, but it's subject to the federal permitting process. So we come back to permitting, and we come back to this culture, and we come back to this clash between what humans want in their life, which is no change, and what they need, which is copper and of course oil and gas and coal. But that's another topic. So another point I've underlined here, that this project would produce 92,000 tons of copper on an annual basis. The reserve is 385 million tons at 0.54, which is quite good. The capex was quite good. On the PFS, the initial capex requirement for Copper World was 1.3 billion, with an additional 0.4 in year 4 to produce the copper cathode. So kind of 1.3, $1.7 billion, and the NPV of 1.1. It's like, oh goodness, the capex is bigger than the NPV, although the capex is about the same size as the market value. So it's really interesting. These are big numbers. There's a Wheaton stream in here of what, as well as this is I think $270 million from the Wheaton stream. So watch this space. Remember, this is just the PFS phase, and the PFS was just on phase one. So they're going to have to do phase two as well. This is still many years away. I expect the capex numbers to grow, but it does show you how valuable these kinds of assets are. $1.8 billion for something at the PFS stage. Right, jumping to Chile. Obviously, we had the terrible news of 6 people dying in El Teniente in the mine collapse. My guys on the ground say that sector of El Teniente is notorious, and actually the Codelco employees typically don't want to go and work there. They almost refuse to go and work there. So that it's known for its ground instability, that portion of the mine. It's typically given to contractors because the Codelco employees the union refuses to allow that to happen. So it'll be really interesting to see how they manage risks at El Teniente. A small loss of production, but that is irrelevant, or kind of nothing compared to the loss of life, which obviously no one wants. A couple of news items out by Glencore, quite interesting, different tone. We'll see this being matched with BHP. I'll come on to that in a second. So basically, closing down stuff in Australia. This is quite well flagged. The Glencore put out a news release, operations and projects, Mount Isa's next chapter, supporting our community. And that came out, I think it came out quite recently. And they say the future of our Mount Isa copper smelter and Townsville refinery is currently under review as global market shifts and reduced copper volumes challenge the sustainability of these assets. So the mine, I think the mining has stopped. They're still working on stockpiles, and they're looking at how long they can keep the smelter going for. But the cost structure, the way that the support from the government just isn't there really, in terms of smelters need feed and they need to have low-cost electricity, and that just neither of those are apparent here. So it's really hard to see how these smelters can keep going. And that's, again, that comes back down to the Australians' attitude to electricity. Fantasy rather versus against reality, wish against need. They wish to have a zero carbon energy transition, they need to keep feeding the machine, because we live in a world which is based on hydrocarbons, and you can't meet those two anytime soon. So Glencore's closing down stuff in Australia and saying, hey, listen, we're going to go and spend some money in Argentina. This was the headline from their news release, and this was from the footnotes, just to remind us all about El Pachón and Agua Rica. El Pachón, 0.43% copper, 2.2 grams per ton silver, and 130 ppm, or 130 grams per ton, or 0.013% moly. Capex is going to be between 8.5 and 10.5. Let's call it 10.5. That gives you, on the amount of production you're going to get from that, it gives you about a capital intensity cost of around $27,500 per ton of installed capacity. And Agua Rica, because it can use the Alumbrera infrastructure, it's kind of, this is a kind of an extension of the Alumbrera deposit, which closed down a few years ago. So Agua Rica actually can produce almost the same amount, but for half the capex, and the installed capacity, or the capital cost per installed ton of annual capacity here is around $14,500 per ton. So 15 versus 27.5. It shows you the once you've got the infrastructure in place, your capital efficiencies are just much greater. But again, decent grade, 0.47, 0.2 grams gold, 300 ppm or 0.03% moly, and 3 grams silver. These are big deposits. These are big amounts of capital. We're talking, let's call it 5 billion there and 11 billion there. So $16 billion potentially going into Argentina. These are nationally important asset investments. Of course, there's still problems with social, there's still problems with water. Remember that Argentina really does not have a mining culture. So the social side of this thing is going to be really, really, really tricky. But there we go. On we go to BHP. They put out their annual results. Gave a really good presentation. I've picked out a few slides from their presentation. It's worth having a look at the BHP results because they're so important. Basically, they've increased their copper production. It's just extraordinary how the majors continue to do this. We wonder how the copper price hasn't moved very much. It's at $437 a pound, or $440. And the answer is that the majors are really, really good at digging up rocks. They're really good at moving rocks and mining stuff. So look, Escondida achieved its highest production in 17 years, and Spence had record production. Those are both in Chile. Copper, South Australia delivered great production in the last 6 months, offsetting the impacts of weather. And look at the margins here. So they produced 2 million tons of copper, and their EBITDA margin is 59%, and that's almost as high as their iron ore margin, which of course are just extraordinary. So these are mega low cost curve assets, which is quite special. They're looking at, why did I put this chart in here? Oh yes, so they acknowledge here that they are in copper. They can see the other majors are at the bottom of the in the kind of the boundary between the first and second quartile in the cost curve, and BHP is halfway up. They've reduced that was 2020. So this is actually retrospective. So they've reduced their their cash cost position. They're now in the second quartile, and they're bang in line with their peers. And of course, with iron ore, they're right at the bottom of the peer group. So they're delighted with their copper performance. Now, when you look forwards about where they're going to be spending their money, West Australian iron ore, yeah, that's investing here, executing on the money here, and they're getting production gains in 2029. But if you look at this, they're doing potash, Escondida, new concentrator, copper, South Australia. They're expecting production improvements in 5 years' time, 6 years, 7 years' time. 31, those at 6 years out from here, and this is kind of 7 years out. Potash here and Escondida again. Look, so there's iron ore, potash, copper, potash, copper. Now, for all of that investment in copper, a couple of really important things. One is, if you look at their Escondida medium-term production profile, they're spending $10 billion at Escondida, but look, their their guidance range, their medium-term guidance range is they might get 1.2 million tons in 2026, but then it is 0.9 to 1 million tons flat out for the next 5 years. So there's no growth in copper output coming from Escondida. In this world where we need more copper, the big guys, they've delivered growth and they're predicting flat line. Now, another really interesting thing here, like Glencore switching money from Australia to South America, BHP have just announced that they're not going to be spending whatever it was, $9 or $10 billion developing their nickel copper assets in Australia, but instead they're going to be pulling it to Argentina with the Filo del Sol, Vicuña district investment. So ciao Australia, hello Argentina and Chile. Into the exploration assets. I've pulled down the weekly reported figures by the Junior Mining Hub Canada, 20th of July, 2nd of August, 16th of August, 24th of August. There's one missing, I just couldn't find it, but if I've missed something, I'm sure it'll come out. So the usual thing is I look at the copper results. I've just done Canada this time. I haven't taken the Aussie ones because quite a lot of these are dual listed, like Firefly and Sandfire, and a lot of the other Aussie ones are just kind of itty bitty stuff. So I've just stuck with the Canadians. Right, for the week reported on the 20th of July, these are the intersections: Firefly, Sandfire, Gladiator, Green Bridge, Giant, Royal Road, Altiplano. 26 meters at 5.3% for Firefly. I haven't gone into detail on this, but this is their 5-year chart, and they continue on that growth profile. They're finding good stuff in New Brunswick, market cap 816, what's that, 500 million US, doing really well. Brownfields, development opportunity, good, we like. Sandfire, Resources America, 15 meters at 8%, great. It's the tricky thing about Sandfire is to work out what it is, and so I haven't really gone into is it a standalone asset? Is it part of Sandfire? Gladiator Metals, 77 meters at 0.7. There's another one. I think they report one here. Here we go. Gladiator Metals, 71 meters at 1.13. I'll talk about Gladiator separately. 150 meters at 0.28. I didn't get into this. I was a bit short of time, busy doing Fitzroy mineral stuff. Right, from this year, from this week, 2nd of August, Copper Giant, 1,000 meters in southeast Colombia, really, really tricky, micro market cap. I'm kind of giving a pass on Macoa. ATEX continue to put out good results, and look at that share price. They're going in the right direction. What's that? It's kind of also just probably around $500 million, maybe a bit less, 450 US. Good company, big asset, going in the right direction, and that will continue in that direction, I should imagine. 16th of August, Cisco. Again, they bought this this large, low-grade kind of retread, and since they've done that, they're on a good trajectory, and they're continuing to drill good stuff. I didn't go and look at it. Remember from last time, you've got to be careful about what the skarn minerals are and what the mineralogy is, but that is interesting. Aras, I'm going to talk about separately. Viscount, I'm going to talk about separately. Gladiator, I'm going to talk about separately. Marimaca, I'm going to talk about separately. And then we're down into the smaller stuff. Next Metals. Okay, the Next Metals it's actually a nickel company. They've got the Sleepy Piqui project in Botswana. So moving on from that, 24th of August. Next Metals, again, that's Sleepy Piqui, that is nickel. Oh, look, Fitzroy Minerals, 119.53%. Yeah, I'll be talking about that. Don't you worry. Kodiak, 111 meters at 0.46 copper equivalent. This is from the south area. They've got a bit of traction. This was the new release that they put out. The new resource. at MDP. It's still hard yards though. It's still hard yards, those low grades in BC. Right, into the companies. And I've ranked these by market capitalization. I know that if you go to the Marimaca results here, it's 70 meters at 1%, which is an exploration result from Pampa Medina. However, a couple of days ago, they put out their feasibility study, their DFS, their definitive feasibility study for the Marimaca oxide deposit, also known as MOD. Obviously, with Pampa Medina, there's been a massive re-rate. It's gone from $5 to $10. We're now up at $1.1 billion company. This is a really interesting release for a number of reasons, because the Marimaca oxide deposit they've been looking at this for a while, and Coro, the original asset's been going for 20 years in Chile. So this is kind of a milestone development. So let's look at some of these numbers. Pre-production capital cost and capital intensity of 587 million capex and 11,700, so just under $12,000 per ton of copper production capacity. So it's kind of a rough guide to the capital efficiency of your assets. How much does it cost relative to the amount of production you're going to get out? It's a useful yardstick for these kinds of projects. Low strip ratio, crucially here, years 2 to 10, steady state, approximately 49,000 tons per annum. That is below the royalty threshold within Chile. So if you go over 50%, 50,000 tons per annum, your royalty rate kicks up quite aggressively. Below 50,000 tons, it's a sliding scale between 2% and 4%, from about 12,000 tons up to 50,000 tons. Right. The ASIC of 2.09 or 2.29 if you're going to do it over the full 10 years. So you basically, you can look at it, if you want to work at this on kind of the back of an envelope, you can give yourself $2 margin at a low copper price in the kind of $4.20s, $4.30s. And if you get aggressive on your copper price assumptions, you can put that onto a per pound basis of free cash flow of $2.20 or $2.50 per pound, and that'll help you with the mental arithmetic. They put in modest recoveries here, 72 to 78%, based on a lot of metallurgical test work. They've done 7 phases. If you listen to, they put out a little interview talking through this. Hayden describes what they did for the 7th phase, which is pretty comprehensive. So 72 to 78%, that's a pretty solid number there. Now, this is good to see. I like the fact that they did the NPV at 8% discount rate. Quite often companies do it at 5% to make things look better. 8% is much more realistic, and that gives a $700 million NPV rising to $1 billion if you use $5 a pound. IRR 31% rising to 39% if you use $5 a pound. 2.5-year capital payback. It's a real project, this, and proven and probable reserves of 179 million tons, an average grade of 0.4% copper. Now, people always say, "Oh, you need 1 billion tons or 500 million tons." This is 180 million tons of reserve, which is a really, really good number. There's probably 350, 400 million tons of resources around this. And it includes some inferred material internally, which will go through the plant, of course. Right, really solid. They've got the water, final permitting, work out the finances, and of course they've got Pampa Medina and Madrugador oxides, which have got the potential to underpin a future regional hub and spoke oxide opportunity. And of course down here, this is where they got the 70 meters at 1%, including 4 meters or 10 meters at 4%, something like that. And there are other intersections down here. So it's a big future project. Go Marimaca. Well done, Hayden and team. Next, we come to Aras. They drilled 440 meters at 0.49% copper equivalent, but when you dig into the numbers, you can see that is 0.16% copper and 0.25 grams gold. This is EL 2512, which is right down here in the south, and then 27 EL 2513 was actually lower grade, encouraging but lower grade. 300 meters of porphyry style mineralization, 1.7 kilometers north of EL 2502. Thick, pervasive mineralization along the Beresky anomaly. So this is the Beresky anomaly. The share price has done really well. Grades are a bit ho-hum, dare I say it. It's really hard to find good copper mineralization. It's really, really hard to find good and economic copper mineralization. So this looks like a big system, very, very marginal grades, 0.16 copper, 0.25 gold. It might shape up. There's lots of strike to test. It's a big system. It's a mineralized system. Tick, tick, tick. Big question mark over the grade. But they've got a portfolio approach. And Kazakhstan is on the rise. So go Aras. Go Aras. It's really hard finding commercially exciting stuff. It's really hard. It's just really hard. Right. Okay. So almost the same market capitalization. So this is 99. Aras at $99 million. Viscount Mining at 88, and Gladiator at 76, and Fitzroy at 68. So we're all roughly between 50 million US and $70 million US. So we're all roughly at the same value. Viscount Mining, I'd never heard of this company before, pleased to announce a pivotal early-stage discovery at its Passiflora porphyry target in Silver Cliff, Colorado. Wow, look at that share price. Woo! Company's first deep drill hole intersected 844 meters of continuous copper-gold mineralization, averaging 0.214% copper equivalent. Copper equivalent. Ah, that's interesting. I wonder what those grades are. Including multiple high-grade zones, such as 189 meters at 0.326 copper equivalent. Oh, I wonder what those grades are. And I wonder where they hit it. Was it shallow? Was it deep? What was the grade? We know what was the from and to. If you're going to be reporting, it's a Canadian venture listed company, you have to report your froms tos. And as I went through it, well, first of all, I went to the website, and then I went to the presentation, and it was like just kind of a Word report dumped into a PowerPoint format, and it was just too long, didn't read. And then I went to the news release, and the information wasn't there. And then there was this kind of line like this: the upper 300 meters of core were not assayed, as the Titan MT model indicated the main conductor began around 400 meters. Sorry, I've got a dog here. So. I mean, this is really, really telling. However, visual inspection of the core confirms strong sulfide mineralization from surface to 300 meters. But when do you do this visual inspection of the core? This zone remains a high priority target for future sampling and reassessment. I mean, these three sentences tell you a lot. They tell you that they don't have geologists who are logging while they're drilling. It tells you that they just were drilling a geophysical anomaly and they had no geological control on this drill hole. So the drillers went and drilled it. So heaven knows what the QA/QC was on that. And then they obviously had no geologists visit it while the login contractor or the subcontractor who was doing the QA/QC and the marking up and the core cutting was just told to sample from 400 meters below, because that's where the geophysical targets start. So the upper 300 meters of core were not assayed, which means that they weren't mapped, they weren't logged. And then eventually, someone eventually got there and looked at the core, and they confirmed strong sulfide mineralization from down to 300 meters. It just shows that this is kind of completely not joined up. And this zone remains a high priority target for future sampling and reassessment. I mean, that translates to, oh, we should have sampled this the first time because look, it's mineralized. Anyway. Major red flags. And then if you look for the from tos, if you look at the copper breakdown, they don't even give you that. What they do give you, I've never seen this before, they've given you 20 samples ranked. So the top ranked had a copper grade of 0.1% and a gold grade of 0.8 grams per ton and 0.35% lead and 0.3% zinc. And it says, look, we've got lead up to 1%, which is here, because this is at 10,000, but actually it's not, you've got to go and reassay that, because this is the maximum within this kind of style of assaying. And zinc up to 0.33%, but here they show that you've got zinc up to 0.34%. I mean, the whole thing is just ludicrous. So avoid. Thank you, Viscount Mining, but you need to go and do some homework. Jeez, oh. Right, hang your head in shame. It's embarrassing. On to a much better company, Gladiator Metals. These guys are doing a fantastic job. Look at that share price growth over the last few years. Market cap $76 million. I put this screen grab in here for a number of reasons. One is it shows you that they're drilling in different areas. Look at this. So May 27th, the Hat deposit, they got 10 meters at 5%. Here we go. Cowley Park, they got 59 meters at almost 2%. Little Chief, they did a gravity survey, multiple large-scale untested copper skarn targets at Little Chief, amongst others. Here we go. At Best Chance, they got 18 meters at 1.1, within 77 meters at 0.7. Here we go at, where are we? At Arctic Chief now, multiple gold, copper gold skarns, 14 meters at 0.8, plus 2 grams gold. I mean, that's a great result from 55 meters, and 6 meters at 2% copper, 2.2% copper, and 2 grams gold from 95 meters, like that. And here we go, results from below 200 meters at Cowley. So that's a lot of metal in a lot of different places. And I found this on their website as on their presentation as well. So here's the Hat trend up here, Arctic Chief in here, Best Chance. You've got Arctic Chief, Middle Chief, Little Chief. This is where they did the geophysical survey. Here you've got Cowley Park, and that's their cornerstone project. And then you've got the Cub trend in here, which they haven't tested in any of these, but crikey. And then you go to Cowley Park and you look at these. This is a snapshot. 90 meters at 1.9%, 98 meters at 1.5%. These are all copper grades. 79 meters at 1.4, 16 at 6, 54 at 1.8, 54, 43 at 2.2. You get the gist. These are all plus 1% intercepts, all at Cowley Park. So really, really super. They're going to be working on a resource like this company. That share price should continue to grow. That market capitalization should change for the better. Oh, I put in 55 billion. I obviously nicked that from a 55 million, not billion, of course. There. Finding copper is difficult. There's lots of metal here. This is great. One of the hardest things in the Yukon, of course, is permitting, getting local people to agree to change. You know, why would anybody want to have a mine here? I mean, if you've got a comfortable way of living, you don't want to see any change whatsoever. First Nations, local residents. So the social aspect and the permitting aspect of working in Canada is a real challenge, especially after the Eagle Mine disaster in the Yukon last year. They're going to be going through this with a fine tooth comb, but that will come with time. At the moment, focus on the geology. This is all going in the right direction. Good. Right. And then we come to Fitzroy Minerals. Here we are. That's us. That's me. $68 million market cap. We put out a news release showing an exploration update from the ongoing 8,000 meter phase 2 drilling program at Buen Retiro near Copiapó. We released holes 21 and 23 to 27, all in the southwest area of the project, which is this area down here, the southwest area. We hit mineralization in all drill holes. The extent of mineralization along strike has increased to almost a kilometer. In addition, we've improved continuity. And as the southwest and the south area converge, we've got about 360 meters of pretty much regular mineralization at surface here, which is all in the oxides. We've got the kind of, it blows out as in width terms in this portion here. Hole assays are pending for holes 28 to 33. 28 is an infill hole somewhere in here, and 29 and 31. If we can get mineralization down to here, that strike length, it will be 1.4 kilometers, which is a good thing. 1.4 kilometers of continuous mineralization when the grades are regularly above 0.5%, then that gets all quite exciting. So we're also starting some RC drilling in the north area, which is way up 3 kilometers north of this south and southwest area, and we're targeting kind of some quite big tonnage potential stuff there. We previously hit 59 meters at 0.4%. It's possibly slightly lower grade in the north, but it's got some good tonnage potential as well. So just a reminder of those highlights: 119 meters at 0.53% in oxides from the base of gravels. So the gravel was 49 meters downhole. What was that? Probably kind of 35 meters, 32 meters of depth. That was here in hole 27, this one to the south, step to the south, mineralization there. We like. I went on to say in my quote, these continued good results in shallow oxide and mixed material in the southwest area encourage us to accelerate ongoing resource delineation and technical de-risking work. We aim to advance towards production as quickly as possible while continuing exploration within the wider project area. Any development is likely to have capital efficiencies thanks to a mineral suite that is commonly treated in heap leach operations in Chile. So oxides and chalcocite and a little bit of native copper and chrysocolla, which is not an oxide. They all leach, and we benefit from existing infrastructure advantages. It's excellent. We're close to the Panamanian Highway, high voltage transmission lines, the mining center of Copiapó, and it's a brownfield site without any residents. And a crucial additional point is that our partner, Pucobre, have got an SXEW plant that is hungry for oxide material 90 kilometers away. So if we can work out a transport solution, then we can save 45% of the capex typically goes into building that SXEW plant, actually the EW plant. So if it's a $100 million project, you'd save $40 million by using that plant if it's available. So we think, because we know that plant is hungry for oxides, we can see at least a kilometer here, possibly up to 1.4 kilometers of strike in oxide, in shallow stuff. We are going to gun for early production. That's what we're going to go for. So meanwhile, of course, we're drilling some of the deeper sulfides, and we are drilling that lovely Cabayos discovery of copper, gold, and moly. But that is enough from me for now. See you in a month's time. The winter in Chile is now fading, and we're coming into spring, and we'll be accelerating the drilling in Cabayos. Good. Go copper. Go explorers. Thank you very much.